Hello, today is the 15th of October, 2022. We always start with our disclaimer. We go over our calls, make some predictions for next week, and look at the long-term picture because it's the weekend. Here's my disclaimer. I would appreciate it if you click like. And remember, my calls can be completely wrong. Any trade you make should be at your own risk. Well, we said at the close of Thursday's trade that we needed confirmation of this rally by going over Thursday's close by 1 cent. So that happens. So we have confirmation of this reversal. As long as this low holds, I'm viewing this as an active pattern. We did say as far as Friday was concerned, it was a pattern with the early high and the late low, with a low in the final hours, and that's what we got. This is a review of what we said. We said that we appeared to hit a low but not the low, and these are the patterns I'm looking for next week. MEJT says this drop is false, gives us a target of 3650.46, most likely by early Tuesday. Unless we gap down smartly, that's my call. But, gapping down smartly can't be ruled out. This drop didn't meet the MEJT sustainability criteria, says we return to this line. We still have an ultimate target of 3770.96. There's no time limit. Doesn't have to print soon, but usually you don't have to wait long. This is the daily chart. This is a reversal bar involving a flat lower Bollinger Band. My rule says when the band's flat and there's a reversal bar involving it, and that, especially when it clears all these bars, you should get follow through as long as we go over this by 1 cent. And the target is a challenge, not necessarily a touch, but a challenge of the upper band, which is dropping but is currently in the high 3800s. Unless this gets invalidated, I'm going to stick with that. We have the DeMark buy signal. We have Carol Ann's spiral calendar date. We have extreme sentiment readings. We have all kinds of people calling for a crash. That's what I like to see at short-term lows, even though I think it isn't the low. Well, this is an all-day drop. I always get suspicious when you drop all day on a Friday and hit a new low with a wall into the close on a Friday. If we were going to break through with some kind of authority, I don't think we'd wait till the last 5 minutes to do it. Of course, what counts isn't this close, it's Monday's open. We open way down here. You can just forget about everything I say. But a lot of times, these things get reversed. Well, here's our weekly chart with our trend line. Bounced right off the trend line. I'm not calling that an accident. Trend lines can still fail, but I'd like this to have a bit more to it. Some people are calling for a crash here, and I can't say it's impossible. This is the crash count, and what's arguing in favor of the count is that we've completed an ABC with C equal to A. There's your A, there's your B, and if that's the right count, we're in waves 3 down the multiple degree. Now, I'm no expert on crashes, but from what I read, crashes occur only in wave 3 of multiple degree. So if we are going to have a crash, there is a count which is compatible with that. I don't like this count for several reasons. One is this just doesn't look like an impulse to me. I mean, that's an impulse. This looks like an overlapping pattern. I think it looks more like a corrective wave than an impulsive wave. Wave 4 here doesn't overlap wave 1, but it does overlap wave 2. And when that happens, even though it doesn't break the rule, I tend to look for something else. If this is wave 3 of multiple degree, I can't say it breaks any rule, but it just looks like more, I think it counts easier as a 3-wave pattern than a 5-wave pattern. Let's see if we are starting wave 3 down by looking at yesterday's chart. Well, if this is wave 3 down, you have to count it as an impulse. This is an overlapping corrective wave. How do you count it as an impulse? Furthermore, this is the active. This is the active pattern. So far, this drop hasn't accomplished anything. It hasn't even gone to a standard 61.8% retrace, even though this easily took out prior highs. This close didn't take out these prior lows. And if you look, even though these lows are less important, it couldn't sit. It couldn't take out these prior lows either. So when you have a big drop and the prior lows hold, for now at least, it's just consolidating within the range. Of course, it all changes if we drop down here, but that hasn't happened yet. I don't have a great count that I'm happy with, but as far as this is concerned, I think it's at least possible to count it as an ABC down. C is equal to A, and if that's an ending diagonal triangle, the target is to recover the origin of the triangle, which is in the 3640s, which is pretty close to our MEJT target. Now, there are all kinds of ways you can count this when you're consolidating like this. You can count it any way you want to, but this is my diamond on stilts pattern. Here's your stilt, here's your stilt, here's a diamond. You take a Fibonacci target of the diamond, and you get pretty much the target. And then here's your 23.6. You take this target from the diamond and you get this. Now this could easily be forming a diamond. It hasn't formed yet, and the pattern doesn't have to go to completion. But if that's the middle of the diamond, there's a Fibonacci target in the 3800s, which goes along with the target from this reversal, which is to challenge the upper Bollinger Band. So if the rally continues, which hasn't happened yet, we have a target somewhere in the 3800s, middle to upper 3800s. I think this dies out eventually. The rule is the longer the base, the bigger the move. That isn't a base at all. You're not going to get a big move. You waited too long for it to call for a huge rally based on DeMark's criteria, but that doesn't mean we can't go higher. If we do go higher, we'll hit the ultimate target as well. If we are going to drop here, you have to find some way to count this as an impulse, and for right now, that's pretty tough for me to do. Nothing's impossible. Well, Monday's pattern has the early high. We could still gap down. There's a higher MEJT target. Unless we gap down smartly, it's favored to print by early Tuesday. Gapping down smartly can't be ruled out, since the day-long Friday decline nearly always carries over into Monday's open. But if we gap up smartly instead, that's a very bullish pattern. So far, this drop hasn't accomplished enough. Thursday's sharp reversal was accompanied by a volume spike, weekly trendline support, a DeMark sequential buy signal, and a Carolan spiral calendar date. Unless invalidated by undercutting last week's low, it remains the active pattern as far as I'm concerned. Extreme sentiment readings also support this interpretation. Now, if that last week's low falls, the break is going to take us much lower in very short order. Any rally from here should be limited in scope. It started too late, began from too far under the 200-a-day moving average, and originated from a spike bottom which should fall at some time. If the rally continues, there's resistance, and it should be middle to high, 3800s cash. Bulls need follow through. Ideally, we should gap up Monday or hold the 61.8% retrace. If we don't do either, it increases the risk of failure of the rally, which should take us much lower if the low of the year falls. Just remember, if this is the right interpretation, wave Magenta 3 usually is bigger than wave Magenta 1. And usually bigger than blue 3 is usually bigger than blue 1. It's going to take us under 3,000 in very short order. That's kind of a stretch for me, but nothing's impossible. So Monday's pattern has the early high. I still think this is a positive pattern. The decline hasn't accomplished enough. If we either gap up or hold this, I think we're going into the 3800s. But if this falls, particularly if this falls, we could have a collapse. And that's today's call.